Revenue Group Berhad was founded by Mr. Eddie 𝗏𝗏𝗠𝐶𝐰𝗶, Brian 𝗏𝗏𝗠𝐶𝐰𝗶, and Dino 𝗏𝗏𝗠𝐶𝐰𝗶 in 2003. They are a cashless payment solution provider offering a single platform called RevPay that provides multi-channel payment solutions to different customers. Their customers include financial institutions, physical store merchants, online store merchants, and e-money payment schemes. The only country they sell to is Malaysia. For more information, you can visit their website at www.revenue.com.my. Rising revenue and gross profit contributed by the increase in transactional value processed via the company's RevPay platform, along with more sales and rental recorded in their EDC terminals. Their growing top line had spilled over to their operating profit, escalating 261% over the years. However, profit margins have been unstable and falling as they incurred higher operating expenses and higher sales from EDC terminal, which contributed lower gross profit. I want you guys to pay attention to the gross profit margins movement and compare with their EDC terminal sales growth. You will notice the times where gross margin drop is when the company sold more EDC terminals, vice versa. As you can see, they make less gross profit when they sell physical products. On the other hand, they make more when they provide services like rental and e-payment solution services. Revenue's ROIC increased more than 2 times thanks to the rising demand for digital payment solution in Malaysia. Although their management has been paying themselves a hefty sum of remuneration, which is almost half of the net profit, but I think it's still fine given their organization size is significantly smaller as compared to larger companies in general. Very healthy cash to debt ratio. The company was initially net debt but turned net cash after financial year 2016. Their cash grew faster after they issued more shares in financial year 2019. Superb operating cash flow, though there was a drop in financial year 2019 as the company incurred a large amount of receivables and inventories from their sales of EDC terminals along with lesser payables. Unfortunately, the company didn't pay a single cent of dividend throughout the years. Their positive operating cash flow had helped them to achieve better free cash flow in most years, though they incurred negative free cash flow in financial year 2015 and 19 as a result of lower operating cash flow. All in all, I rate their company 3.1 out of 4.8, which is about 64.5%. After analyzing Revenue's 10 years of financial data, here are my thoughts. Number 1, the company's growth is dependent on the number of credit card and online payment transactions. According to Bank Negara Malaysia, the transaction volume of e-wallets is higher than credit cards. But the value of credit card transactions surpasses that of e-wallets multifold from 2015 to 2020. This suggests that credit cards will continue to be relevant in the digital age and complement e-wallets in the market as customers will still need credit cards for big-ticket item purchases. Either way, Revenue will stand to benefit from both sides, but it's still a great news for Revenue's EDC terminal business segment going forward. Aside from that, almost 70% of the company's total revenue comes from a few major customers. When comparing their sales by business segment and sales by major customers, I suspect customers C and D may have bought a lot of EDC terminals from them, though it doesn't really tell us much about their profile. Lastly, the company's exponential revenue growth from selling EDC terminal had caused their gross margin to drop significantly. As I explained earlier, they make more when providing services like rental of EDC terminals, e-payment solution, and maintenance services than selling the physical products. Having said that, if they proceed to sell more EDC terminals, we may expect their profit margins to be lower in the future. That's all for today's video. If you enjoyed the analysis, I would appreciate it if you can help me smash the like and subscribe button to support the channel. By the way, I have a Facebook page. If you'd like to see more different contents like market update and company announcement, feel free to follow. It's the same name as my YouTube channel, Not an Analyst. With that, I'll see you in the next one.